Hello and welcome. Today, we are cracking the code on one of the biggest, most powerful engines of the Indian stock market, the IT sector. It's a global giant, right? And really understanding what makes it tick is absolutely key. So if you want to know what forces are pulling the strings on these market titans, well, you've come to the right place.
So, here's our game plan. First, we'll get a handle on why the sector is such an engine for the whole market. Then, we'll check the global weather report, all the outside forces they have to deal with. After that, we're going under the hood to see what makes the businesses themselves run. We'll learn about the market's unique rhythm, and then we'll wrap it all up with the key takeaway you need to remember.
All right, so first up, the engine itself. And look, this isn't just some niche topic for day traders. The way these massive companies perform has a real ripple effect that you can feel across the entire Indian economy.
Really, it all boils down to this one question. What are the invisible strings that are pulling the levers on these huge stocks? And the answer isn't just one thing. It's this fascinating dance between global economics, how brilliant a single company is, and the surprisingly predictable rhythm of the market itself. And here is the single most important thing to get your head around. The money flows in from other countries. A massive chunk of their revenue comes from clients in the US and Europe, not from within India. This means their health is directly, and I mean directly, tied to the health of the global economy. When the world is spending, Indian IT is absolutely thriving.
So that leads us perfectly into our next section, the global weather report. Just think of these as the big external forces, the economic storms and sunshine that these companies have to navigate but have zero control over.
It's actually pretty straightforward. Because their biggest customers are in the US and Europe, what's happening in those economies is everything. When those economies are growing, businesses there feel confident. They invest more in tech, and that means more contracts for Indian IT firms. But the moment a recession hits, you better believe IT budgets are often the very first thing to get slashed. Just think about it. If a big American bank sees trouble coming, those new software projects get put on hold, and that immediately hurts the bottom line of the Indian firm they were going to hire.
Okay, now let's talk about the currency game, because this is where it gets really interesting. Since these companies get paid in US dollars but have to report their profits in Indian rupees, the exchange rate is a massive deal. So look at the left side. When the rupee gets weaker, every single dollar they earn is suddenly worth more rupees when they bring it back home. This can boost their profits without them even signing one new client. And of course, the exact opposite is true when the rupee gets stronger.
And of course, it's not just about the economy. You've also got to watch for geopolitical stuff, like trade tensions or something like Brexit, which can just create a lot of uncertainty. U.S. immigration policies are another one, especially around H-1B visas, that can directly impact how they staff their projects and what it costs. And finally, always keep an eye on those forecasts from the big research firms like Gartner or IDC. Their predictions on global IT spending can literally move the entire sector. All right, so we've checked the external weather. Now let's go inside. Let's pop the hood and see what's happening within the business itself. What are the specific things that really drive a stock's performance from the inside out?
Well, a huge piece of the puzzle is figuring out who is buying all these IT services. And you can see it right here. Sectors like BFSI, which is banking, financial services, and insurance, along with healthcare, they are the absolute heavyweights. When those industries are doing well and spending a ton on technology, it's a massive green flag for the IT firms that work for them.
And what exactly are these clients spending all that money on? Well, it's the megatrends that are shaping our entire world. You've got the global push for digital transformation, the big race to the cloud, the absolute explosion of AI and automation, and of course, the constant need for cybersecurity. The companies that are seen as leaders in these high-demand areas, they're the ones that win.
You should never, ever underestimate the power of a single good headline. When a major IT firm announces they've won some huge, long-term contract, it's like a powerful signal to the whole market. It means guaranteed revenue for years to come, and investors react almost instantly. It's not uncommon to see the stock price jump on that news alone.
And then you've got the quarterly report card. Every 3 months, the giants, TCS, Infosys, they have to release their earnings. And let me tell you, a positive surprise or a really strong forecast for the future doesn't just lift that one company's stock. It sends this wave of optimism through the entire market, lifting all the other boats right along with it.
So, we know the what and we know the why. Now let's get into the when. As it turns out, the IT sector has this surprisingly predictable rhythm, with certain times of the year that are just historically way more active than others. This timeline shows this really fascinating annual rhythm.
So the year kicks off with budgeting season from January to March. That's when global companies are locking in their IT spending for the whole year and signing brand new deals. Then March gets really critical because it's the US fiscal year end, which triggers this whole flurry of contract renewals. After that, you've got the big earnings seasons, first from April to June and then again in October, where every company's performance is put right under the microscope. Understanding this cycle can give you a huge leg up in seeing what's coming.
All right, we have covered a ton of ground here. So now let's bring it all home. Let's distill it down into one simple, powerful takeaway that you can use to make sense of all the headlines you see. So let's just boil it all down to this really simple 4-point checklist. First, check the global health. Are the US and European economies feeling good? Second, keep an eye on the currency. Is the rupee getting weaker or stronger against the dollar? Third, look for those company wins. Are the big firms announcing major deals and great earnings? And finally, who's leading the pack on the hottest tech trends like AI and the cloud? If you can keep track of these 4 things, you are going to have a fantastic grip on what's really driving India's IT stocks.
And that just leaves us with one final thought. The drivers we've talked about today are incredibly powerful, for sure. But the future is always being written, right? As AI continues to just reshape our world at a blistering pace, the real question is, what's next? What do you think the next big chapter is going to be for this industry? Thanks so much for joining us for this explainer.